Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 3rd, 4:17 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Little change up in the schedule this week. Tim will be doing the Thursday video. Hunter will be doing the Friday video. I'll be in Orlando attending the Martin Armstrong World Economic Conference, which I attend every year. Always some amazing information comes out of that, and I'll be sure and share it next week when I get back. So, state of the market, we continue to be in an uptrend. Leaders strong. Short term, 21-day moving average, all the major indexes are above, green there. 50-day simple moving average, our medium-term indicator, green there. Long-term 200-day moving average, also green. So what happened today? Fed meeting and press conference. Fed announced that they were going to proceed with bond tapering, and the result was a rise in interest rates, weakness in the dollar, and the market's pretty happy with it, closing at all-time highs. You can see the G5 growth composite index up 0.6%, S&P 500 up 0.65%, NASDAQ 100 up 1.1%, Dow lagged up 0.3%. Mid caps and small caps continue to rock. Mid caps up 1.1%, Russell 2000 up 1.8%. We'll be showing you breakouts on charts of those momentarily. Let's get to the market facts, but first, it's a fact that this is the team running Revere Asset Management. Fully engaged with the market now as we're in a strong uptrend, but if that weakens and we start to consolidate, we'll wrap up profits or cut losses in any new positions. If the market rolls over, we get the heck out of the way. That's the way we do it here at Revere. Time tested. You can go back and look at any videos at any point in time. We tell you what we're doing with the market, completely transparent. Good feeling for our clients knowing that as the market ticks higher and we move our stops up, that just means more of the profits that we've gained are locked in, and they'll be there next time the market continues to trek higher. If you're interested in this approach, you can email any of us. Dan at revereasset.com, Tim at revereasset.com, Hunter, Mural, Alex, or Don at revereasset.com. Or you can call 855-REAL-WEALTH. That's 855-732-5932. One secondary indicator starting to get a little bit frothy in extreme greed now is the fear and greed index. This isn't a pure sentiment indicator, as this you can read a little bit about it below here. This takes some actual stats from the market when it calculates this, but from a pure sentiment standpoint, I'll be looking for the updates coming out of individual investors to gauge that. So let's get to it. Here is the S&P 500. Let's take a look at this on a 5-minute chart here, and you can guess when the Fed announcement came out. Can you tell? So just going tight sideways within yesterday afternoon's range until 2 o'clock. Fed announcement came out. We popped down. Now, very often you'll get a false move in the first 15 minutes of the direction, but the pullback didn't even really just came back to the top of the 30-minute opening range on the day and the prior highs of the day before we took off into the close. Market really is okay with what Jay Powell's doing. So all-time highs, and we just continue to step our stops up. 50-day moving average now above the prior bounce highs. That just provides additional support anytime the market comes down. 45.46, the prior low, we're at 45.33, so a couple more days, and the 21-day exponential moving average will be above 45.45. That'll be another key level of support. Should we pull back, and we will, we always do. The question is when. We don't pick tops. We just continue to ride the trend as long as it goes higher, and if the trend changes, we take appropriate action. But for right now, bullish. So let's get to the NASDAQ 100, the QQQ. And you can see very similar situation, all-time high close. Relative strength has been there on the NASDAQ over the last week and a half. Relative strength has not been with the Dow Jones Industrial Average, but really that's quite all right. It's more of a defensive index, and it leads when the market is pulling back. You can see how we've been rallying now for 3.5, 4 weeks. And although the Dow is at all-time highs on a relative basis, it's losing ground to the S&P 500 and certainly to the NASDAQ 100. Now, the breakout we've been talking about, looking at for a while, some say it's too obvious, and maybe it was the first time. We just pulled back, tested the 21, and boom, off to the races. All-time highs on the mid-cap index. We love looking at this. Mid-caps are the incubator for the next big moves in mid-cap stocks as they make their way into the S&P 500. And finally, small caps busting out today. Didn't paused for one day. Small cap growth, however, has not broken out yet, so we've got some room to run on that yet. Here's small cap growth, and you can see still a few percent away from breaking out to all-time highs, but again, note the relative strength over the last week as growth stocks have really been rocking. Portfolios up almost about 11% over the last 3 weeks off of the lows that were made the day before the follow-through day. So let's take a look at the market facts. Nothing really new here since I just reviewed them last night. The bull case continues to, as long as we stay above the 21 and the 50-day moving average, that's the bull case. Bear case failed breakout below 44.30. I'll probably be updating this to take to 44.69 as the 50-day moving average is now above that. As I mentioned, rates up, dollar down, market at all-time highs. Nice close. Banks, semiconductors, biotech, retail, and uranium led today. Oils and gold lagged. We're at 44.61, now 10.3% above the rising 200-day moving average. Every bear market that I've studied going back to the late 60s started with us 12% above the 200-day moving average. That's just anecdotal. That doesn't mean if we get to 12%, we're rolling over. So let's take a look at some stocks that acted pretty darn well today. Silvergate. This is, let me shrink the charts back down here. Silvergate, this is, there we go. They created a crypto network, SEN, Silvergate crypto network, and Pioneer initially, and this is important, gap down on earnings. When is a gap down on earnings good? When it clears out the weak holders. Note how, and I've talked about this in my gap webinar that I did, when the low of the gap day is put in and you get above the high of the gap day and then continue to trend higher, that's when a gap is very beneficial. We took advantage of this and have a position in this. We sold some of it into strength, sold most of it, in fact, as it's getting extended, looking to re-enter on a pullback. Ambarella, I wish all stocks acted like this. This thing is a frozen rope. 12 straight days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight days of higher lows. What more can you ask for just riding this 8 EMA higher now? Double-edged sword here means that, the first hard break of the 8 EMA will be a changing character, and I wouldn't be surprised if there was a harsh sell-off here. So we've got some pretty good gains in this. We're keeping a close eye on it. Tesla leading this market. Inside day yesterday, inside day today until the Fed came out. Let's go to the 5-minute chart here. Actually, it was later in the day. Didn't bust out right away. Not until 3 o'clock did this break to higher highs and closed above 1,200. Was that the first close above 1,200? Does it matter? Not particularly. No, second close above 1,200, but it did make close at an all-time high. Let's see what else acted well today. CBRE, real estate play that we own in-house. We sold CrowdStrike. This one was a disappointment. This had a perfect setup. Broke this downtrend on big volume, continued higher, but a failed breakout. And while a bunch of stocks are making highs that we own, seeing something that has a breakout failure just makes it a laggard, plain and simple. Now, this was a third stage base, so a little bit later, maybe it's just money rotating into new things, and this might need to reset itself. But if it does, I'm not putting up with it. We came down, we broke the 21. The 21 has rolled over, and then the last 2 days, anytime we tried to get above the 21, that acted as a cap. So exited crowd today, but we have bought a couple things this week. We added to our AMD position, and this just continues a very nice reversal, post earnings reversal, and are now at all-time highs. We added to Goldman Sachs. This ad is a little bit underwater. Goldman underperformed today. Not really sure if there's a reason. Don't need a reason. We'll go with the price action. NTR. This looked like it had a shakeout, then got back above the 21. We bought this yesterday, but it's reversed, and the 21 is acting as resistance. This might not be long for the Revere portfolio if it doesn't get above today's highs tomorrow or the next day. We added to our uranium ETF position, URNM, very strong day with volume for uranium. Added to our SU position, very strong oil stock, pulled back, bounced off the 8 EMA, initiated a position in TAN off this very nice pullback and bounce off the prior pivot here around 92.50-ish. And we added to Dexcom on today's pullback. Very strong out of the box on its earnings report and pulled back below the close on lower volume than the last 3 days. Nice pullback in this. Not good action today on it, down 3.1%, but you got to take that in context of the prior 3 days, what it did and how it broke out. So we added to that today. So those are the portfolio changes. And that's going to wrap it. As I mentioned, Tim is going to have Thursday's video. Hunter will do Fridays, and he'll update the 21 over 21. We'll definitely have at least 3-4 stocks coming on. Well, not definitely one at least. And let's take a look at that. A terrible reaction to apps on earnings, closing at the low of the day, down 19%. Once it broke the 21 today, that was a sell signal. It just continued lower. This is a case where sometimes you don't want to wait till the end of the day, as it just continued to trickle lower into the close. Hedge funds unloading apps on the numbers look good. It's not the numbers, it's the forward guidance and the reaction to the numbers that matters. Always keep that in mind. On the other hand, if you're a 50-day moving average person, it's sitting right there. Not for me, though. I want things that are making new highs along with the market. So that's going to wrap it. As always, love to hear from you. I'm on Twitter at Vandenbord, email don@revereasset.com, phone 855-REAL-WEALTH. Wrapping up Wednesday, November 3rd. This is Don Vandenbord telling it like it is. Thanks for listening, and have a great day.